Starting up, open anything up.
Yes. Good morning, everyone. My name is Heather Fay, and I'm the Regional Program Director and the Botetourt Advisor. And I have with me my colleague, Tom Tanner, who's our Lead Advisor and Vet Biz Coordinator. And we are here to talk about the Restaurant Revitalization Fund. As Tom mentioned, things are changing as we speak, and we will be keeping you guys updated. We are recording today's presentation, and we'll share that with you all after the slides after the presentation. If you all will keep your mics muted and add any questions to the chat, I will be keeping an eye on that, and we will have some time for question and answer at the end. All right, Tom, take it away.
All right. Thank you for joining this morning, this early Monday morning. We originally had this scheduled for last week, but as normal, there was very little information out, and we figured that it wouldn't be much use doing a seminar with unknown information. So a lot of information came out late on Friday. So I've updated presentation to reflect all the new information, even though it's not 100% yet. So what we're going to talk about today is, first of all, we're going to give you a little bit of an overview. We're going to talk about who's eligible and who's not eligible, how do you use the money, and most importantly, how do you calculate how much you can get? What's the application process, the documentation you're going to need. There are going to be some other consideration type stuff. We will have times for questions since we are recording it. Just use the chat box, and what we're going to do is stop the recording at the end, and we'll take questions at that time. Or I don't know, we may just leave the chat box. I mean, we may just leave the questions being recorded. I'll leave that up to Heather since she's got the button. Um, so the information I've obtained is from some of the SBA information, but also information from the National Restaurant Association. So um, again, the SBA is slow at releasing information. So this is not by any means a final presentation and everything exactly the way the program is going to be. But man, it's a lot closer than it was in the middle of last week. So it was created as part of the American Rescue Plan. Right now, there's $28.6 billion placed in the fund, which probably most likely is not going to be anywhere near sufficient. And there's word that they're probably going to add more money to it if need be. Maximum amounts is $10 million and $5 million per location, which I'm sure that doesn't affect too many people here. So this grant program is going to be administered by the Small Business Administration. It's not going to be done through local banks or anything else. This is going to be kind of like the EIDL program, where you basically dealt with a online portal or an 800 number of whatever. We're again not positive how that's going to work, but that's most likely the way it's going to work. Right now, the SBA has still not published any true guidance on this program. So we're still kind of in the midst of trying to figure it out. And there's no startup date has been set. Supposedly it's supposed to be the middle of April, but this is the middle of April. So I'm guessing it's probably closer to the end of April, if not even the first part of May. We'll just find out one day. We'll wake up and it'll go, it's been launched. So what is an eligible entity? So most importantly, you can't be closed permanently. So you can, if you close your business, you can't go after money that you've already spent. The most thing is if it includes businesses where the public or customers assemble for the purpose of being served food or drink. It's pretty wide open. So these include things like restaurants, food stands, food trucks, food carts. If you're a caterer, of course, they got bars, saloons, lounges, taverns, which in Virginia you don't have all those, but they do include snack and beverage bars. If you're a bakery, and there's a couple of entities that are like this, your own site sales must comprise at least 33% of gross sales. In other words, if you do a lot of wholesale stuff, you still have to have on-site sales must comprise at least 33%. And the same thing is going to be for things like brew pubs, tasting rooms, microbrewers, wineries, and things like that. It even ends that if you sell a lot of wholesale items, you still have to have at least 33% of it, of your gross receipts from the public, not wholesale, because this program is not designed for a wholesale business, designed for a retail type business. Oops. Um, Franchises are obviously available. So if you're a franchise operation that does, you are able to apply for it. Bankruptcy, if you're an approved bankruptcy plan, this means either a Chapter 11, 12, or 13, and it's court approved, you are eligible for this. You are not, however, eligible if you've been permanently closed, if you file Chapter 7, or you're going through a Chapter 11, 12, or 13, but you not have a court approved plan. All right, so what is not eligible? So these are state and local operated businesses, businesses owned with 20 more locations. All right, so this is a big one. I don't know if it applies to anybody here, but businesses that received or have applied for a shuttered venue operators grant. So it doesn't mean you just received it. It's if you have an application pending for a shuttered venue operators grant, you are not you cannot apply for this particular grant. Again, we talked about permanently closed. As it stands right now, nonprofit organizations are not included in this case. And there's talk that if you go through the calculation process and your grant is less than $1,000, the SBA has the right, and they may exclude as part of an ineligible entity. So if the math comes up and you're getting 800 bucks, most likely you're not going to be eligible for it. All right, so how does all this work regards to if you receive PPP loans, which I'm sure a lot of you probably have. So the way that's going to work is that any PPP loans that you have received, you will subtract those from their funding calculation. And we'll go through the calculations in a minute, it'll make more sense. But in other words, you can't double dip in both programs. If you have submitted a PPP loan but have not already received it, and you apply for this loan, it will automatically cancel that PPP loan. So, because it's subtracting it out anyway. So you'd end up getting either the money without the PPP loan, or if you got the PPP, it was subtracted out. And plus, if you thought about applying for one, you're not going to be able to get it if you get this particular loan program, because again, it would be a double dipping process. So that's an important feature, just make sure you're aware of. Just like the other programs, if you received a PPP loan or even an EIDL, there was a particular certification in there. It says current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Just letting you know that's going to be a certification, a little checkbox that you're going to have to sign off of. All right, so eligible uses of the funds that you can get. So one thing, the covered period is actually from February 15th, 2020 through December 31st, 2021. So you actually have the ability to go back all the way to February 2020 and count any expenses that you incurred and back pay for these things as part of this grant program. There's even the capability that the SBA can even move that from December 31st, 2021 till March 11th, 2023. I don't think even if it did, I don't think people would necessarily need to use it, but that's possible if you have enough money and you can't spend it all before December 31st. If your business permanently closes, the covered period is going to end on the business permanently closes, and you're going to have to return any money that's not already spent. So what can you use this money for? So payroll costs, this includes sick time, business mortgages or loan obligations. You just can't prepay stuff, but you can use it for any sort of loan obligation, both interest and principal. Business rent, again, you can't prepay. In other words, you can't pay for the next 5 years of rent. Business utilities, business maintenance expenses, including if you want to construct outside stuff for seatings and things like that. business supplies, business cost of goods, business operating expenses. Really, there's not a whole lot this doesn't cover other than expansion of your business. In other words, if you wanted to buy all new equipment or buy a food truck or whatever else, you cannot do it through this program, but you can pretty much cover almost everything else you can think of. All right, so let's talk about the calculation. First thing, a lot of this is based on gross receipts. So gross receipts does not include anything you receive from PPP loan, from the SBA Economic Disaster loans, or the advance. It also does not include state and local small business grants, anything that's funded through the CARES Act, which is mostly what these local ones are. And if you happen to have an SBA Section 112 payments, these are like SBA loans, which the SBA actually paid part of your loan for a certain period of time. Those are also not included in your gross receipts. You also do not include state sales tax for either local or state meals tax. You also would not include any capital gains or losses that you may have incurred. In other words, if you bought equipment or sold equipment, things like that, and you either had a gain or a loss, those would not be included as part of that. All right, so let's look at the calculation. It depends on when you're set your business up. So we're going to have multiple calculations to go through. So you have to kind of look at how your business falls into this equation. So first off is if your business was in operation prior to or owned January 1st of 2019, in other words, if you opened in 18, 17, 16, or anything else, or even on January 1st, what you're going to do is obtain the 2019 gross receipts. So what was the total of gross receipts in 2019? What was the total of gross receipts in 2020? What was the total of all your PPP funds received? And now it's just a basic formula. You take your 2019 gross receipts, you subtract your 2020 gross receipts, you subtract your PPP fund, and that is your grant amount. So I made an example here. So if your 2019 gross receipts were $500,000 and in 2020 you lost 50%, so you did $250,000 in business, but then you also had a $75,000 PPP loan, then it's basic math. You take 500, subtract the 250, and you subtract your PPP loan, and your grant amount is actually $175,000. So this is a pretty generous program under certain circumstances. All right, so how does it work if you opened in 2019? It has a very similar approach. The only difference is that you have to take your average monthly gross receipts. In other words, if you open for 6 months, you would take your total of gross receipts for 6 months, divide that by 6 months, and then multiply it by 12. So if you had a total of 120,000, you wrote in 6 months, you'd have 10,000. Well, you'd have 20,000, then you add right. In times 12, it give you 240,000. So it tells you it gives you an average for the whole year, and you multiply it by 20 to give your 2019 gross receipts. All right, and then you also look at your 2020 gross receipts, and this would be for the whole year, and also look at your PPP funds. The difference, the same thing, you would take your 2019 gross receipts minus your 2020 gross receipts minus your PPP loan, and that is your grant amount. So again, another example, you had a $300,000 gross receipts, and that's your total times 12. Total, your average times 12. Your gross receipts for 2020 was 225,000. Your PPP loan amount is 40,000. So they basically subtract them out, and you're going to end up with a grant of $35,000. All right. So now let's move to this, which is in some ways really exciting for certain people. So if you began operations on or between January 1st, 2020 and March 10th of 2021, which means just a couple weeks ago, or 3 weeks ago, 4 weeks ago. In other words, you opened after the disaster started. This is the first time anything like this has happened. Everything has always been prior to March 10th or, what, March 20th or whatever the date was. Okay, this means if you open between the first of the 2020 and up to March 10th of 2021, and even if you're not even opened yet, but you've incurred eligible expenses during that period, then you can apply for this grant program. So what you would have to do is determine the amount that's spent on eligible expenses between February 15th, 2020 and March 11th, 2021. Determine your gross receipts during these period and determine any PPP loans obtained. So basically you're taking the amount of eligible expenses, you subtract your gross receipts, and then you subtract your PPP loan, and that gives you your grant amount. So let me give you some examples. One, you opened January 1st of 2020. So you had amount of eligible expenses was $150,000. Your gross receipts for that year were $100,000. Amount of PPP was $10,000. So you take 150 minus 100 minus 10,000, and you have a $40,000 grant amount. All right, so let's just take another example. Let's say you opened in December 1st of 2020 and you had $100,000 of eligible expenses. The amount of gross receipts, say you only did $25,000 in that period, and the amount of PPP was zero, obviously, because you couldn't have got a PPP for after on December 1st. So you take 100,000, you subtract your 25, and you still get a $75,000 grant. Okay, so let's take one more example. Let's just say you're not even opened yet, but you've incurred eligible expenses. So you have eligible expenses of $50,000. You have no gross receipts, and you have no PPP loan. And basically, you're entitled to a $50,000 grant. Pretty cool. All right. So how are we going to apply for this program? So you're going to be able to apply only through the SBA grant platform, which has not been released yet. We don't know when it's going to be released or how it's going to look like or whatever. There may be an 800 number too. We don't know, but if there is, you're still going to have to somehow submit all the information. There's not going to be a local application process, even though we're going to be here to assist with any application processes, either whether virtual meetings. We're actually going to do on location meetings. We are trying to work up some things where we actually come out to meet you at your restaurant and walk you through the process, etc. There may be another application process, like I said, like an 800 number. And there may be some other things that they've talked something about through a point of sale system, et cetera, but we won't know that until they release final things. All right, so what kind of documentation is going to be required for this? Well, first of all, you're going to have to fill out their application, which we don't know what it's going to look like. So we don't know how complicated. Hopefully it's not going to be as complicated as a venue grant, which is like 12 pages or whatever. So you will be required to fill out a Form 4506, which is basically just allows the IRS to release tax returns to the SBA, because that way they can validate the numbers that you're talking to back to your tax return. So they're also going to be asking for your business tax returns for 2019. If you haven't filed 2020 because you filed an extension, or if you're Schedule C or Schedule F, you still have till May 17th. I would still get them done as soon as possible so they can be submitted to the IRS. And that way you have it to present to them. Don't wait to the last second to try to get those done. If you do file a Schedule C or Schedule F, you would also need those. If you're a partnership, you're going to be required to provide the 1065. Again, this would be for 19 and 20. You might be required to update, submit bank statements, state sales tax reports, internally, externally prepared financial statements, point of sale reports, IRS Form 1099-K, which is the credit card sales. These are all things that they may ask for to determine your gross receipts, because they're going to want you to prove that the gross receipts that you're claiming are the correct gross receipts. And they're not most likely just going to take your word for it. They're going to want to see real documentation. All right, so if you're a brew pub, tasting room, brewery, winery, distillery, or bakery, as we talked about, we have that issue with the 33%. So there's going to have to be some sort of document to show that you are doing at least 33% of retail sales. And if you're selling alcohol, you can do that through ABC forms. The easiest way is through sales tax reports showing exempt sales versus non-exempt sales. That's an easy way to show it. An interesting thing that it appears they're going to ask for is if your business that opened in 2020, all they're going to be wanting to see is, since you're not maybe open yet or barely open, is what is your plan? Is your plan basically revolve around, is your business model revolve around a retail structure, or is it revolve around a wholesale structure? If it revolves around a wholesale structure, you may not qualify for it. And the same thing for ends. So for applicants that began an operation owned between January 1st and then March 10th, 2020, and applicants have not yet opened, you're going to have to supply some sort of documentation of gross receipts. Of course, if you're not open, it doesn't require, because you don't have any gross receipts. But if you are open, you have to require gross receipts. But most importantly, you're going to supply documentation of eligible expenses during this pay period. So this is going to include things like if you're paying people 941s, if you have expenses like rent, you're going to need to supply maybe a copy of the lease. You're probably going to supply copies of checks where you actually wrote stuff, any construction expenses, any supplies, cost of goods, all of those. These are things that you can be putting together. We just do not know exactly what they're going to require. So you're better to get stuff together rather than trying to scramble. Because once this thing opens, it's going to be flying off the shelf, this money. So right now, the plan is during the first 21 days, they're going to reserve fund for applicants where the applicant has self-certified. And basically, it doesn't mean you have to have gone through any sort of like SWAM certification or any national certification, but you self-certify that you're either a small business concern owned by a woman, a veteran, or socially economically disadvantaged individual. They're going to be the only ones that can apply during this first 21 days, or it may be during the first 21 days, those applications are going to receive the priority. We do not know how that's going to work, whether on day one you can apply regardless of your situation, but if there's other applications in front of you that are self-certified and meet these requirements, then they'll be in front of you. After day 21, as our understanding, it's just going to open up full blast to everybody. So let me just, I'm not going to read through this because you'll get a copy of it, but basically these just gives you the definitions of small business concern owned by a woman, veteran, or socially economically disadvantaged. It describes what a socially disadvantaged or economically disadvantaged individual is. Just remember, it has to be 51% for any of these. And 51% is one or more individuals. In other words, if there's if you have a business that's owned by multiple people and two of them are women, if both of their ownerships add up to more to 51%, then that business does qualify. It doesn't mean that one person has to have 51%. It just means if you add the concern is owned by one or more, it can be one person own, one person like a woman owns 30%, and then you have a veteran that owns 21%, then it still falls under that category. In other words, the way it's set up is you can combine those different categories in order to get that 51%. All right, some other information. The entity's pandemic related revenue losses are estimated in its grant application. So in other words, if you would have to return funds if you overestimated it and said, oops, I didn't figure this correctly. If you go out of business, then you have to make sure that you give money back. And if you fail to use all your funds before the 3/11/23 if that's the final date, or if it's December 31st, 2021. I'm sure most of you, if you get money, you'll find a way to spend it. Um, just like the other programs like PPP, grant funds will not be included in federal gross income for federal income taxes. Um, just like the PPP loan program, state taxes or don't necessarily follow the federal rules because some PPP funds are have to be included in state. Um, well, not the gross income, but the deductible expenses. So the expenses paid for by grants will also be deductible in federal income tax. Again, the state may or may not allow that. I'm sure they're going to have another decision process to go through as whether or not those will be deductible expenses. But right now for federal, they will be deductible. So a couple of things that started off with, and I know several of you on this call went ahead and went through the process of registering through sam.gov and DUNS. If you happen to have heard that that was a requirement, it is not required now. So I'm sorry who anybody went through that painstaking process. I'm sorry you had to do that, but it's no longer required. If you are doing anything like employee retention credits, they're not deducted from grant funds, so that doesn't apply like the PPP loans. Again, this is based on information that was available when we started doing this program. They're going to change, and when they come out, they may be close to what I'm talking about here, or they may be totally different. I do not know. So we are going to be going on the road. Initially, we had this set for next week. I think that's going to be really, really optimistic. The SBA is going to release this program next week. So we're still going to do this sometime. It just most likely will not be the 19th, 20th, 21st, and 22nd. But what you can do is go to Run a Small Business. And if you would like to set up an appointment, and we can either come out to your restaurant or meet you at a place, or we can either you can come to our office, or we can do virtual meetings. We have multiple choices what to do. But our process is basically, this is a fabulous program that everybody needs to take care of. And I put a little note here, please pass it on to others in this industry, because this is a good deal. A lot of people, especially individuals who started last year, they've all looked at it and go, well, none of these apply to me, so I'm not even gonna waste my time. Well, this does apply to you and could be very beneficial to those individuals. So please pass that along to others, that this is available, and that we will be letting you know when we're going to start this process and get back with you to schedule dates and time for it. And that is it. So Heather, I don't know if you want to stop the video, or if you want to just record the questions and answers, or just open them up. It's up to you.
Sure, I'm going to leave the recording on. That way, if people that were not able to join us this morning, they can listen to the questions as well. So I do have a couple questions in the chat, and then we can open it up for questions live.
I have a couple of answers.
Excellent. All right, let's see here. So the first one is, get my chat box working here, is from Bridget. She's asking about if you would clarify on the PPP loan, do they have to subtract the first and the second?
Hi, Bridget. Sorry, Bridget is one of those that went through the process of signing up for Sam's and Dunn's and everything else, and about a day after that, they decided you didn't have to do that. But anyway, Bridget, no, yes, you would have to.
But now I can become a government contractor. And I'll sell paper clips.
That's right.
So yes, you have to subtract first and second, all PPP loans.
Okay, that's interesting, because the original article that I read said that we would not be subtracting the first, but only the second. And that it even went on to say that people who received funding before December 27th on the second, I don't know who that was, but that they wouldn't have to subtract that either.
Now,
so that's changed.
Yeah, the way it stands now, it's first and second, because basically what they're saying is that you're basically double dipping. You've already got those funds. So um, they're trying to give you money for the money that you have not already received funds for. So
Okay,
of course,
thank
anything
you.
can change when they file. Again, this is based on the latest information that I've been able to put together. And that's what I am reading. So
Thank you.
All right. The next question is from PBS. They're asking if new owners took over an existing business mid 2019, what is the correct calculation to use? Actual gross revenue for the year, average monthly gross revenue for the time after the new owners took over?
no, it would be based on the old owners. So if, again, this should be the same way it is um, for a PPP loan, which is it's based on the ownership, I mean, of the actual business. In other words, if the business been in business since 2018 or whatever, you would use the full year from when it started business, not when you bought it.
Excellent. Thank you. Okay, the next question is from Janice. She's asking, is this only for new businesses and not those already in business as of 2020 who have not been able to apply?
So this is available for any restaurant or any of those other ones. So the calculation's just different. Again, the calculation is if you were in business prior to 2019, you have one calculation. And if you're in business after January 1st of 2020, it's a separate calculation. But it's available for anybody who's in the restaurant, bar, bakery type businesses. And you'll get a copy of this presentation also.
All right, Tom, those are all the questions that I have in
Boy,
this chat.
making it easy on me this morning.
Okay, I spoke too soon. We've got one from Joshua. He is asking, we took over our catering company in July 2020, same business DBA, just took over the business. We qualified for the PPP and Rebuild Virginia. Will we be eligible for this program?
Yes. And again, it's going to go back to when, just like the PPP, it goes back to when the business was actually started, not when you took it over. At least that's the way we understand it's going to be. It's going to be like the PPP. So.
Super. Other questions, feel free to unmute if you would like, or you can keep adding them to the chat, either way.
Is everybody excited about this? This is a big deal. I mean, this could be a big deal, especially for businesses that didn't start till March or April of last year. I know I've had several clients. This is a pretty big deal that could be good money for people. And if you had a business that was greatly affected by COVID, I mean, this could be some big dollar amounts too. But keep an eye on this thing, because as soon as this thing opens up, we're going to try to rush as many people through for this first 21 days, because after that if you fall in that category, the first 21 days, because after that, we don't know how much money is going to be left over after this thing. It may get sucked away pretty quick.
May I say something, Bridget?
Sure.
It could be a big deal, but now that we're having to deduct both PPPs, my concern is that we're continuing to have substantial losses in 2021, but we're not going to be able to claim any of that. So that's why I'm not quite as enthusiastic as I previously was, because I've gotten both PPPs, and if I have to deduct both of them.
Right.
Yeah.
Well, some people may be more excited than others. How about that?
Yeah, but I mean, something might occur in the future if this continues to drag on. They might decide to supplement something for 2021 losses, because we're definitely in there in the loss category in 2021. I just thought I'd mention that. Thank you.
Thank you. Good point.
Tom, this is Janice. Can I ask a question, please?
Sure.
What do you feel, because I know it changes by the moment, What do you feel is the likelihood that in addition to tax returns, they're also going to ask for professionally prepared P&Ls? Because some of these mom and pop restaurants don't have good financial records, and it takes us accountants and bookkeepers a while to recreate those for them.
Yeah, I don't think so. I think most likely they're certainly going to look at tax returns because those are the easiest things and that would be the one thing I would say more than anything else. If somebody hasn't put together their 20 tax return, that they probably need to be working on that and getting that done as soon as possible, because that will be something that's figured into the equation.
Okay.
Of course, there's other things that they may be fine with using. Again, I don't know, but to me, one of the most easiest thing to prove gross receipts would be sales tax returns.
Yeah.
That is something that everybody has to do, and they do it every month, and it proves what your gross receipts are. So that's an easy report. I don't know if that, what we don't know is whether it's going to be an either or either and, whether or not they're going to want and this and that, or
Right.
just one thing that shows what your gross receipts are. I mean, you could do that through bank accounts even, but um, I don't think the internal P&Ls or certainly professionally generated P&Ls are going to be necessary.
Okay. And if I can, I was a few minutes late coming into the seminar today, and thank you so much for doing this. I'm glad we're going to get a copy of it. But did I understand you to say that there's going to be preference given to women and minority and veteran-owned businesses before other businesses will
Yes.
be considered?
First 21-day period will be for women-owned, veteran-owned, or socially or economic disadvantaged individuals.
Okay. Any chance that that will suck up the funds available?
No, I mean, I doubt seriously if it would,
Okay.
because probably most of those are going to be. I doubt seriously it would suck it up. I mean, even if it did, I can't imagine Congress not putting more money into it because, just from a political standpoint, they probably would not allow that because
Might
too
not
many
bode well.
people would not have access to it. So my concern would be more is once it's open and you get some of these large organizations that have, that can get up to $10 million, that's what's going to suck these things out, not these small business concerns that, are probably, might get 100,000 or a couple 100,000, but, or even less. I mean, it might be like the PPP, the average PPP loan is like less than $50,000. So.
Right.
If I could piggyback on that, my wife and I, she's 50% owner. Does it have to be solely female owned, or how does that work?
Has to be 51%.
50. So okay, she has to be majority. Got it.
Yeah. Is she 51 or 50?
It's 50-50. So that answers that question.
Yeah. Yeah. Of course, what it doesn't say is when it has to be 50% on. So I'll just leave it at that.
A quick trip to your CPA, Joshua, could fix that for you.
Yeah, I was going to say, change your ownership structure on your tax return or whatever. Especially
I put my question earlier in the chat, but I did want to clarify. We took over a business on July 1st of 2020, and I have had a good bit of a headache qualifying because we took over the business as is, with the intention. I mean, the whole reason for doing so was the owner had given up, and we were trying to save the business. But on paper, our LLC didn't begin until July 1 of 2020, and that's created numerous headaches in getting the PPP and rebuild the Virginia. But after a lot of banging our head against the wall, most of it did finally go through. So you're saying this would follow that same criteria?
That's my understanding. It follows the same criteria. Again, this is a self-certification too, as to the women-owned self-certification. So I'm not saying this is the case, but if you decide that that your wife should own 51%, it may just be, if you're an LLC, it's just a matter of changing your operating agreement. That's what that she now owns 51%.
And last question, I apologize. I like that the other person I got on here late. You
Shame
said
on
you're
you.
gonna you said you'll be emailing this out.
Yes,
So we don't have a date for this yet. We just know it's coming.
we do not know. I mean, initially they had said it was going to be released by the middle of April. I know that's not going to happen. I don't know if anybody's been following this venue, the venue grant or the SVOG grant that they opened last week that they just had a massive problem with. And they closed it down like 5 hours after they opened the portal. So I'm guessing that they've got to get that one fixed, running, and that they're not going to do this program because it's going to be a much larger program than that one was until the technical bugs are worked out. So I mean, I may be wrong, but I'm betting it's going to be at least the last week of April, if not the first week of May.
Gotcha. I appreciate you guys putting this together. Thank you.
No problem. Pass it along. Any other questions? Well, thank you for joining us this morning. Again, you'll get a copy of this. Please pass this information along. If you're interested in us helping you out with the process, with application process, go to our website. And you can sign up. I think you can sign up for just to give us our email and then we'll contact them back. Is that the way it's working, Heather?
Yes, so on our website, there's a little red box that pops up that you can add your information that we can follow up with you either by email or phone to schedule an appointment with you. These dates posted are tentative pending that everything moves forward with the release of the application portal. But if those change, we will certainly keep you posted. I'll also encourage you all to follow us on social media on Facebook and Instagram. We're trying to keep as much information out to you all. We also send information by email. So stay in touch with us and we will stay in touch with you. But like I said, you can sign up to be put on our list for us to come to you, to your restaurant on an upcoming date to help with your application. And as Tom mentioned previously, all of our services are confidential and there's no fee for any of our advising for you all.
Good deal. Well, thank you for joining us such early Monday morning and let us know how we can help you in any way. Thank you.